Hi, my name is Terrence from San Francisco, California, and I got a question. What do you feel about the uranium bull run that's going on right now? And do you think uranium stocks is a good buy and a hold for the long term?
So what's got uranium going nuclear, so to speak? Here to help us break it down is Global X ETF Senior Research Associate Rohan Reddy. He's the main analyst of the Global X Uranium ETF, ticker URA. Rohan, great to have you with us. Prices are actually at 9-year highs. So what's fueling this?
It was all set up to start from the initial output of 2020. So what we saw here was initially the market was very soft to begin with. It was very oversupplied. And then when COVID hit, the market became very tight right away. So we are seeing right now a lot of physical buyers stepping into the spot market, which is sort of a new phenomenon. And we are seeing recontracting from a lot of utility companies that also use nuclear for power plants. So right now, we're seeing a combination of both technical buying and also buying from financial buyers as well, who see uranium as a very undervalued asset class. Just for a note on our ETF URA, we've seen over $400 million trade this week on that ETF. For an ETF with $1.1 billion in assets, that's a huge amount of volume.
Cameco, as we're showing the viewers at home right now, 23% of the ETF. What other sorts of names are there in this ETF, and how should investors think about the array of companies in the uranium space?
Uranium, it's a very top-heavy industry in terms of the producers. You've got Cameco, Kazatomprom, which is out of Kazakhstan. Those are two of the largest producers in the world. And so typically when those companies start to halt production or they change their capital allocation for production, that drives a lot of the supply on the uranium side. So because those companies have been very conducive in holding back supply of uranium, in fact, Kazatomprom cut back recently on production growth for the next 2 years, and we are seeing that that's also been driving some of the gains. So right now, we are seeing a combination of both higher demand in the market and then also really cut back supply.
Jeff?
Yeah, quick question for you. So we mentioned Cameco. I think that it's interesting in the sense that the price is back to pre-Fukushima around that 2011 area. But back then it was trading at 25 times. Today, something like 700 times. And I know maybe that calculus changes given the price of uranium. But how do you start to think about the valuations relative to the move in a stock like that?
Sure. There's been a lot of technical buying, as we've seen with Reddit, and we also have seen a couple of closed-end funds and hedge funds step into the space that have really brought some financial assets into it that weren't there before. But we are seeing right now, if you look out decades or two, we are seeing a lot of companies right now think about using nuclear that have not before. So, for example, uranium, it doesn't use any greenhouse gas emissions or emit any. So what we are seeing is a lot of companies that are looking to reduce their fossil fuel footprints or countries as part of the 2050 Paris Climate Accords that we saw. We are seeing a lot of companies right now and countries and governments start to think about reducing fossil fuel footprints, and that's also driving future growth plans for some of these companies like Cameco. So even though the valuations look pretty frothy today, we expect they're going to build into their valuations.
Does uranium typically fall into ESG investing into that purview, Rohan?
It was never thought of that way, but it's actually building into a nice story for ESG, because after Fukushima, people thought this can't really fall into the ESG category. A lot of countries are going to move away from that because of the nuclear waste aspect. But we are seeing right now, because it's one of the few power sources that actually does not emit fossil fuels in terms of compared to those greenhouse gases, relative to solar and wind, it's actually pretty attractive, and also on a levelized cost basis, it does emit less greenhouse gas emissions from that standpoint. So it is a pretty clear ESG story right now, considering what we're seeing both politically and then also, from ESG investors today who are looking to divest from oil and gas.
Rohan, thanks for your time. Appreciate it. Rohan Reddy. Guy, back to Terrence's question, which is, how do you feel about uranium stocks? What do you tell him?
It's a great question. And, you know, it's funny. Well, it's not funny, but last week we do a meeting every day, and Karen Feinerman actually mentioned uranium. I know you remember that. And Karen's been on top of this for a while. This is what I think, if you got a 5-year view, I think this is potentially one of the biggest places you can be in terms of upside gains. But I will say, Jeff sort of alluded to this. You go back and look at a Cameco CCJ chart. We just topped out pretty much exactly where we topped out in March of 2014. So although the story is intact, I think you're going to do what we call in trading a back and fill. And I wouldn't be surprised to see CCJ trade down to the low 20s. I think you grab it if it gets there.